Good afternoon, everyone. My name is Maureen. I am from Standard Chartered Bank Transportation Finance team. I'm based in Beijing. I'm mainly in charge of the shipping finance and aviation finance for clients based in mainland China, Hong Kong, and Japan. Today, I feel very excited to moderate this session. I still remember last year when I met Mr. Nick Wu in another conference. A shipping company expressed that due to ESG concern, a lot of the European banks are not providing financing to offshore projects anymore. But then interestingly, Chinese leasing companies are very active and becoming more and more active in this space. So I think it will be very interesting to have this session here. And today we are very honored to have invited Mr. Josh Zhao from China Merchants Financial Leasing, Mr. Nick Wu from Yinson Production, and Mr. Gao Fei from BOC Financial Leasing, and also Mr. Huang Cheng from Sinosure Jiangsu branch. So before we start, I would like to invite each speaker to give a quick introduction of themselves.
My name is Zhao Xing. I'm from the China Merchant Financial. So after my graduation from university, I was engaged in offshore equipment. And later, I go to AVS in the United States. I work as a project manager there. And also, I go to the AVS Leasing at HSBC. I go to HSBC because they need someone with the background in offshore equipment. Now I come back to China to work for China Merchant Financial Leasing. We have a strong focus on offshore and FPSO. After that, we have a project in FPSO. We have made the financing on this preferential through the preferential equity model, also the common equity model. So now we can basically support all kinds of projects through the FPSO model.
Thanks, Maureen. This is Nick. I'm a senior manager in the corporate finance team at Yinson Production. I'm based in Singapore. Quite happy to be here. I feel we are one of the very few ship owners here, so quite happy. And I think this might be the first time that Yinson Production is presented at Marine Money in China. So at Yinson Production, we are global FPSO players. Currently, we own and operate 8 FPSOs, 3 FSOs. I think we have realized how important this market has become. Over the last 2 years, many of our new FPSOs or FSOs were built in a shipyard in China. And from the financing perspective, we have significantly diversified our funding sources through Nordic bond market, project bond, multiple structure commercial lending. But although we have spent so much time with a shipyard in China so far, we haven't enjoyed the benefit of the capital from China. So I really feel this is a quite good opportunity for us to exchange the perspectives, talk about the opportunity, the challenge, and explore options.
Thank you. Mr. Gao.
大家下午好，我叫高飞。
Good afternoon. My name is Gao Fei. I'm from the China Shipping, from the Bank of China Financial Leasing. We are a platform to support the shipping finance. We believe that we're the youngest shipping finance department in China, but our growth is very fast. Shipping finance is one of our strategic business sections. So after 2 years of development, we have 60 vessels, and including the vessels for shipping and also offshore equipment. For our team, on average, we have 10 years experiences in offshore devices. We offer financing solutions to offshore equipment partners.
Huang.
Good afternoon. My name is Huang Cheng. I'm from Sinosure Jiangsu branch. I'm the head of the shipping finance of Sinosure Jiangsu branch. Sinosure, since 2009, we we maintained proactive underwriting policies for shipping and offshore sectors. And our Jiangsu branch, located in Jiangsu province, we have abundant shipyard resources in cities like Nantong, Taizhou, and Yangzhou. And since 2001, our business scale continued to expand. And in 2024 alone, we supported shipping and offshore sectors in totaling $2.2 US. So it's really it's really honored to be here in person to join the discussion. Thank you.
Thank you. So my first question will be asking Mr. Zhao and Mr. Gao, our leasing company's representatives. So as we all know, offshore projects such as FPSO, FSO require a lot of capital commitment. So for your internal risk assessment, what are the key risks, maybe the top 2 to 3 risks that you will focus on? And for these risks, what are your mitigating measures? And would you consider Sinosure solutions? Why and why not? So maybe I start with Mr. Zhao.
Thank you. Normally, the offshore for the offshore projects, if you analyze the risk, there are different risks in the construction phase and also the operation phase. Normally, we believe that after first oil, the operation risk could be pretty low, because you can see FPSO companies, they will review their uptime, and all the listed companies report about nearly 100%. So that's fully running. That's why the construction risk is quite high, and during construction phase, you need to provide a guarantee to the financiers. So that's quite a heavy burn to all the FPSO companies. But in generally, if you talk about risk for the leasing company, I think, well, they have some way to control, to manage the risk. And during the construction, the risk is there. And if they cannot take it, it's very difficult, because for a shipping product, you can ask the parent company guarantee to provide the refund to you. But in the offshore, no such arrangement for that. You need to evaluate the EPC contractor's capability. So if you can recognize that you do not have this further risk comparing with shipping finance. And I leave it to Gaofei. Maybe he has other answers, concerns.
Okay, thank you for your question. As Chinese leasing companies, for the offshore financial leasing, we access a wide range of risks. We prioritize three main risks, we think. First, it is completion and delay risk. Second, I think is the uptime risk after delivery. Third, as mega offshore projects are typically custom-made, has very limited liquidity. So our mitigated risk measures, such as first, we would like to choose reputable EPC contractors and the very experienced sponsors. Second, we prefer to finance the assets with a long-term sub-bareboat charter, sub-TCPs with strong end users after final acceptance. Third, we can engage the Sinosure to mitigate relevant risk. And fourth is for ourselves, we will enhance our professional capabilities and diversify the risk with the joint leasing structure. Yeah, that's all. Thank you.
Yeah, thank you. So my next question will be for Mr. Huang from our Sinosure. So from Sinosure's perspective, what are the key challenges you see in offshore projects compared to other projects? And in what circumstances would you recommend Chinese lessors to consider Sinosure solution?
Yes, from the Sinosure perspective, we think the offshore project financing is quite different with the tankers, bulkers, and container ships financing, because the commercial vessel can be sailed globally and it's easy to resell. But we think that the offshore project, the offshore unit, is very unique and it's very customization, in high customization. And I have to say that they have a poor marketability. And the unit will be deployed or operated in specific maritime zones for 20 years or even 30 years. So, and also the offshore projects is always related to the oil and gas price. So this is another risk aspect we should value. So notice with Sinosure normally we mainly supported the production, the offshore production unit like FLNG, FPSO, FPU, FSRU. And we think that the production unit will produce stable future cash flow for the payback. So, but to another like the drill unit, the jackup and also the PSV, the supported vessel, I have to say that we take a caution approaches to this kind of unit, because these kind of units are very sensitive to the oil and gas price. And when we talk about the risk, I think from Sinosure side, we should comprehensively to think about the sponsors' financial strength and also the operator's capability to operate the unit. We should look at the historical record about the operators' operating record, like the uptime rate. And another is that I think the unit will be operated in a specific zone or country or a region for a long time. So we should take a look at the country's risk of this specific region, which is also our special. We're good at. Sinosure is good at to value the country risk in China. We are a very leading agency, institution, and so when we talk about the collaboration with the leasing house, I think I have to say that we always want to recommend the leasing house to choose Sinosure to share the project risk. Thank you.
Yeah, thank you. So my next question is to Nick. So because you're from the ship owner perspective or sponsor perspective, right? So what are the pros and cons when you're working with leasing companies compared to banks? And what are your suggestions to lessors and to banks?
Thanks, Maureen. I think maybe allow me to quickly talk about our financing strategy in general. I think just in 2 years back, in some production, we are basically 100% financed by the banks. But as we continue to refinance at the project level, at the asset level, I think over the last 2 years, in total, we have repaid about more than $2.5 billion back to the banks. So as of now, 70% of the financing for Yinson production are non-bank financing. But that doesn't mean that we don't value. We still value the relationship and the support from the bank that can bank us. But we realize it's essential, even with the sufficient liquidity in the market, we have to diversify our funding pools. And this is actually part of the capital recycling strategy that we have. So we have issued 2 project bonds under the S144A structure, one last year and one this year. What we have seen and what we like from the capital markets is the transparent pricing, fixed, very long tenure. For the last one, I think for the 2 bond, I think we have 18.6 and 19.3 years. And this helped us to recycle our equity as much as we can because the cost of equity is way higher compared to the cost of debt that we have. But back to leasing, I think especially the China Leasing Capital, they have been a very important financing options for the conventional shipping sector. But we haven't seen lots of successful transactions in the offshore. We have a few, I think we are actively engaging with the leasing providers, like we spoke with Josh, spoke with Alex. I think what we have seen from the leasing capital is that they are quite competitive in terms of pricing. Based on what we heard, they can match a longer tenor, and usually they can do longer than what the banks feel comfortable to do. I think they can do a much larger size compared to the traditional bank financing. So for some transaction that we saw in the offshore, a club of 4 or 5 leasing providers can bank a 1.5 billion transaction, which is very remarkable. And also, I think specifically the team that we work with, for example, Josh, Alex, I think they have all spent many years in the shipyard or agency. So they knew the product, the sale and leaseback structure really well. And also they knew the technical side of the vessel as well. But the downside or the challenges that we saw, I think mainly from 2 things. The first one is the sale and leaseback involves a transfer of title. It's very common for the conventional shipping sectors. For the ship owners, it's straightforward. But based on what we hear and what we have experienced, it's not straightforward for the upstream offshore clients. And the second one is because it's a relatively new product for the offshore. I think from our side as a borrower or as a developer, and also from the perspective of leasing providers as a lender, I think we have to share the risk a little bit. I think people talk about contract with Petrobras, with ENI. I think it's very bankable clients. We have lots of options. But for the first one to take the grab, I think we have to take some additional steps and be more flexible.
Yeah, thank you. Yeah, you speak about the risk sharing. Actually, my next question is to all the speakers here. So when designing the deal structure for a offshore project, how do you balance the risk sharing among the lessors, among Sinosure, and among the sponsors? And do you see any industry-proven win-win model for reference? Maybe I will start with Mr. Zhang.
So regarding this risk sharing, when you are doing this project, you can realize that this is actually not that simple. You can hardly to share. Like, for example, you see some of the risk, how you can share the owner or the sponsor. You can only undertake the risk of like delay. But if you're going to ask them to return the money later, it's impossible. So if you're going to do it, you have to recognize that sponsor, and also the risks to postpone is quite hard and also hard to control. And also for IPSO companies going to have the risk to keep to control. So for us, I get involved of SPM's contract investment project. I can confirm that I have already considered all of the potential risks transferred to the other side, but actually at last, some of the risks, no matter you can transfer or not, it's not that important. Most of the important thing is that you're going to take all of this risk transfer out. Your profit will be low. You have to accept this profit rate. This luckily is that it was our first project. We would like to undertake that low profit. If we can transfer that risk, we have transferred that risk. So this is our understanding for the risk, but for the sponsors, their understanding to it is different. They can see more. when we do the whole deal, we can realize that they are actually very professional. We are actually a financial organization, but they are stronger than us. This is actually hard to say. And also when we do this different radio, so for this type of things, at the early stage, they already locked, but for our state-owned company, we cannot lock it. This is actually, like accessories products, not only for us, but also for the other financial investors. They have the same problems as well. So basically, this is the situation. And also for the post-bonds risk, actually, no matter for this the industry or the financing, so actually, we are really based on the risk. Once you identify all of the risk, it's impossible because they have the long term. You can only facing some problems. You have to solve one problem. This is going to be the thing. So you have to select a very strong partner. When you select that, so from the investment perspective, once you're going to find a partner, you actually combined your profit together. You actually have the same profit, so you don't need to worry about that much. So if he cannot handle, you definitely cannot handle that. So that's it. So what I would like to say.
Okay, now let's listen from sponsors' perspective.
I think Josh seems to be a bit more cautious on stage. He told me before the meeting, after the construction is done, post-delivery, you can invest with your eyes closed.
Sleep tight.
But I think that's quite optimistic, and I appreciate that. We need this kind of mindset. But from Yinson production perspective, we are very cautious. And we want to make sure that we have a bankable contract for us and also for the financiers, because it's a super capital heavy asset. On average, it costs between 1.5 and 2 billion US dollars. It takes 3 to maybe about 3 years to construct. And I think Josh correctly pointed out that for construction risk cannot be shared. So for us, there's a few risks that we don't take. For example, the commodity risk. The volatility doesn't really impact on our payment. We don't take the currency risk. We don't take the interest rate risk. Even if during the COVID, when the SOFR is sky high, we do the hedging because we are not trying to be too smart to speculate. We don't take the reservoir risk because the business model we have, and we only specialize in lease and operate. So we have a long-term contract with a strong and bankable clients. So the risk that we can take, and we are supposed to take, construction risk, O&M, operate and maintenance, and the counterparty risk. I think these 3 risks are quite relevant to the financiers. So I think so far we have did quite well. We will try to manage and significantly de-risk the construction and O&M risk. So we have quite good track record for the recent FPSOs, Agogo FPSO. It achieved first oil in just 29 months. Definitely set a new track record for us and also for the sector. And we have the highest technical uptime. I think as Josh mentioned, it's very important to have a partner with strong operational capabilities. And then for the counterparty risk, we are very selective. Even though I think we closed a $1 billion structured equity. So we have a very solid capital position at the moment, but we remain cautious and selective about what kind of contracts and client we are able to take, because we have the mindset that for the contract that we're going to have, it has to be robust, commercially viable, not just for us, but also for the financiers.
Yeah, thank you. Mr. Gao?
Yeah, for us as traditional leasing companies, we are not the equity investors, but the asset financiers. So for our one is a predictable and safer return of our capital. So I think from our side, the risk sharing focuses on 3 layers. First, for the sponsors need to stay in the game. We expected the sponsor to to provide about 13% equity before the leasing package kicks in. And the second, Sinosure insurance shall be the bedrock. And for the third point, it is the completion guarantee from the shareholders and also the first priority assignment of on the asset, such as the project contracts, especially the long-term subcharter with end users. Yeah, that's all.
Thank you, Mr. Huang.
Yeah, from Sinusure's, we think that we always welcome structured financing because the contract value of offshore production unit is very high. Normally, it will need 1 billion or 2 billion financing amount. If just Sinosure to give out our policy, it means that we should go to our central government to get a fund approval. It is not efficient. It takes a lot of time, and we always welcome because I think the production unit is globally sourced. It means that the ECs from different countries could take part in, could collaborate with each other, and to provide a syndicate like the syndicate EC back loan. And also we always welcome the commercial loan and even the fund all these institutions to get collaboration to share the risk and to improve the efficiency. Yeah, thank you.
Thank you. So my next question is still to leasing companies, Mr. Gao and Mr. Zhao. So given the size of such offshore projects, I understand sometimes leasing companies will form JVs to act as asset owner. So do you see any special difficulties in such JV owner structure? And how do you deal with such difficulties? Maybe I'll start with Mr. Gao.
Okay, thank you for the question. Actually, we are the bank-owned financial leasing company. We are unable to form JV, but we could register the ownership on one single ownership certificate according to the investment proportion to achieve the effect as JV. Yeah, in so-called the JV, in so-called the JV deal, usually there are many problems, such as we need to align the risk appetite and the different requirements from different leasing houses. And in practice, now usually there are 2 or 3 leasing companies with more shares or more extensive experience. They will act as the leader or the coordinator to negotiate with the clients about the term sheet and the key terms. And other companies, they will act as follows. They will follow the term sheet and the key terms that are decided by the leader and the coordinator, so we can enhance the efficiency. Thank you.
Yeah. Thank you, Mr. Zhao.
Because for the joint leasing, I actually have finished one order, and that is for a project in Brazil. We have the experience, and for this project, we also are incorporating this concept that
we are also using this model. We will form a JV to proceed with the contract. For the commercial financing, maybe we will use another model. So I'd like to share with you my experience in other projects. Maybe the company may think that this project is quite risky. Maybe your boss will come to you that you need to divide it by 50-50, so I need a new partner for that. If you talk to the credit department, you say that I have a project, but it's quite risky. I would find a partner to share this risk by 50-50. But the credit company, the credit department say to you no. So what would you do?
lesson
So
take from this
what's your
story?
lesson learned from your
Basically to-
story just said? The credit department say no to you.
其实也不算，因为
Actually, it's a dead end. I cannot persuade my credit department to approve this project. Otherwise, they will find a lawyer to talk to me. But anyway, I leave my remarks in the department. The credit department just give me a direct no, because it's a compliance issue. There's no way out. There's no flexible solutions. It's just a dead end.
Okay, so I think my learning from this story is maybe starting with a more challenging structure and then give solutions rather than, give a already well thought structure, but then you don't have any other solutions, then maybe you will be stuck there. So, but it's always like this, it's life. So basically find a good strategy to present and to convince any risk approvers. So my next question is it's the final question actually to all the speakers. So in your recent offshore projects experience, no matter successful or failure, especially with the Chinese lessors, so what do you think is the most critical element that can determine the success of this project? And how do you think this element can be replicated to future transactions? Maybe we start with Mr. Zhao and then all the way to Mr. Huang. Or maybe, Nick, you can go first.
Just too eager to share.
Please.
I think for the sale and leaseback structure for the offshore, one of the key challenge or the risk that we have is execution risk, because each asset is too big, right? So we need to make sure that we have a high level of certainty. But it's always quite difficult because for all the innovative structure, you need sufficient time and sometimes failed attempts to make it work. But I feel there's a few things that we can be aware of, be mindful of, and trying to optimize. For the subcharterers, under the sale and leaseback structures, I think what we can do is for the leasing providers to work together to promote and to refine the structure, the concept of transfer of title to the upstream clients. It does not seem to be straightforward for them. For example, what kind of terms that can be provided, what kind of LQE can be provided, so they are confident, the subcharterer would be confident that with sale and leaseback structure, they are not structurally worse off compared to other form of financing. And the second point is between us as a borrower and the lenders, it is important that we have a high level of transparency from day one, that we have to identify, communicate all the challenges, difficulties, whether it's the consent process with a subcharterer, the level of security package, what kind of guarantee you would need, or other commercial considerations. We need to identify and make it upfront. So even if we have the obstacle that we cannot resolve, we can have a fallback options. We can still deliver the project. And also, by having this trust, it's a trust building process. Then even this transaction doesn't work, but we leverage a quite good foundation for the future collaboration.
Yeah, thank you. Mr. Gao.
那么简单谈一下我个人的看法。首先就是最大型的海洋工程。
So for this large-scale offshore project, IPSO, IFG, my personal feeling is, internationally, the sponsors and Nulia, their acceptance to the financing structure is quite low. For the long term, they are used to do the syndicate financing or these debt issuing. So from the management to the operation team, they are not motivated to accept this new business structure, to explore the financial leasing. But now, given the market situation, they are interested in understanding more about the financial leasing. I used to have this project. We have spent a lot of time to talk to each other, but finally, one of the stakeholders said no to the financial leasing structure, so this project failed. Actually, for the end user, FPSO project, this large-scale asset are their core asset. It will have great impact on their cash flow. They need to be very cautious. I understand their concern. And that's the factor we need to consider for our future project. For the future, we think that we need to strengthen, to enhance our communication with the sponsors. For certain projects, we need to work together to proceed these projects and to show them the benefits of financial leasing structure. We can make a comparison with the traditional syndicate financing way or the debt issuing way. So the end user would have better understanding about this financial leasing structure, enhance the awareness of this new deal structure. So in the early stage, they can do the assessment of the project, and later, when we work on the structure again, when we try to persuade them, it's easier for us to get the approval from the end user. If you cannot persuade the end user, finally, we cannot get a final approval. This project will fail. So that's my take from my previous project.
Mr. Zhao, do you have anything to add?
那我就接着说一些吧，机会也比较难得，就跟大家。
Well, I think this is a very good opportunity to share my experiences. Actually, in China, this financing company, for them to accept offshore is quite difficult. In previous years, I have been trying to raise awareness of this offshore project to the certain financing companies. They are quite reluctant to accept such deals. And for us, IPSO, it's actually more of a energy sector project. They're not fall into the transportation infrastructure sector. So I need to let my counterparties, my stakeholders, to understand more about the operation of this project. Also, I used to work with the Bank of Industry and Commerce Shipping. We used to also have good returns from offshore project, and they have. So when they have a successful project, the project team would have more confidence to accept offshore project and to persuade the relevant stakeholders to work on this project. So we need to have successful experiences. We need to build the standard model, the pilot model for leasing. Only in this way, if you have a successful project, you can persuade your stakeholders to accept this structure. Otherwise, people would go traditional way to do the syndicate financing, the debt financing. And like sensing, if they have a successful case, it would be easier for you just to copy your successful model. When you have the solution for your customers, very comprehensive solutions with all the factors considered, your clients, your customers may be willing to let you to have a try to do the financing structure. And now when we're working on certain project, actually, sometimes you can offer a better solution to your clients, to educate your clients. So if you can win the trust of your clients, they are quite willing to work with you. Also, I spent a couple of years in financing company. In 2014, 2015, when I noticed the offshore crisis, I always think that these offshore financial entities, they are doing quite well in risk management. But in China, our financing companies, they're not doing so well in risk control. And for certain projects, they may lose out. So we need to learn from these successful cases. And also, we need to work with our local physical companies. Now we work on IPSO. We are providing support. We make investment in IPSO, not only financing, but also along the whole industrial trend. We work with industrial partners. We work with other stakeholders. Soon, we will have a mature platform. 3 SOEs will join this platform. I will also work with this platform. If you're interested, I can give you more details about this platform. That is quite an interesting project. Also, one interesting experiences. I used to have a 5-year negotiation on a financing project. The return is Soho plus 330 and with a guarantee from the parent company. But actually, after we complete this project, and this client said they want to return the financing ahead of the schedule. So sometimes maybe you need to find a balance in you think about your financial terms because you want to be a partner, you want your both parties to learn from each other to find a balanced solution for each other.
I'm sure we will see more successful offshore projects with Chinese leasing companies involved. So our session will end here. Thank you very much for your time.